Hey, what's going on? Steve Peterson with Infinity Investments, and welcome to our channel. And on this channel, we talk about all things commercial real estate, particularly with the investor, developer, brokers, and agents in mind. Now, in today's video, we're going to talk about why you still should be buying multifamily properties. I love multifamily properties. I've started in the business with multifamily. I still think it's the best investment of all the food groups of commercial real estate. And there's three reasons why I'm gonna explain to you today that you still need to be buying multifamily. And the reason I say still is because in the pandemic, a lot of investors, a lot of my clients, and I'm in the Bay Area, are getting fed up, man. I mean, they're getting fed up with multifamily. And not so much the buildings, right? I think the biggest pain point is the operations. And particularly within the Bay and Oakland and San Francisco, Berkeley, San Jose, it's the local ordinances, the state ordinances, the lack of the ability to evict people who are not paying the rent and or maybe disrespecting your property. That frustrates people, right? And I get it. I absolutely get it. Here's the deal. Don't just give up on apartments just because of this pandemic and because of the laws of a particular area. You have the ability to go out and invest anywhere you want to invest, all right? And what I see a big trend of today, people selling out of their properties in the Bay and going elsewhere. And a couple of my clients are like, I'm done with these apartments. I want to go into triple net properties, which could be a really good move, by the way, if you make the right investment. And I'm not against that. What I'm saying is, still understanding that multifamily is the best investment. Number one is because it's got the most attractive financing and the most attractive financing terms. And banks feel a lot more comfortable lending on apartments than they do in office, on a retail, and other food groups. Now, I will say this though. Industrial properties really picking up a lot of popularity. They've been doing really well over the last 5-10 years. And in this pandemic, they have really, just kind of weathered the storm, if you will, and are in even more demand. But I think you need to know that clientele. You need to know that market if you're really going to have success there. So apartment buildings allows most people, whether they're experts or not, to enjoy in the best possible financing that is available in commercial real estate. The interest rates, the terms, the loan to values, they're all typically going to be the best in multifamily. All right, now underwriting is a little bit more difficult these days in the sense of, the underwriters want to know, are these tenants paying during COVID-19, especially if you're in the Bay Area. They want to check the last 3 months' bank statements. They want to know which tenants paid which. If there wasn't a payment that came in, they want to know why. They want explanations. It's tough. But the same thing is the case for other food groups, right? And so while this can be frustrating, understand it's happening across the board. It's not just apartments. And the laws that are in particular areas that are not the same, even from a place like Oakland to Stockton. So a lot of my clients are going out investing out into Stockton, which is the Central Valley. It's still within the state of California, but the laws city to city are totally different. They're a lot more lenient for landlords out there. And so what I just want to make sure you guys understand that multifamily is still the best, because the financing is the best. Number two, it's the leasing process, even though it has softened up a lot, particularly here in the Bay Area, the lease up is still going to be a lot easier, a lot faster, a lot more simple than when you're leasing out office, retail, industrial, and say, for instance, you're in the hospitality business. All right, and you're not even leasing, you're doing daily rentals. I mean, and it's more difficult to get those type of tenants than it is to get someone who wants to rent an apartment. And that has always been the case historically. Now, some areas may be different. What I'm seeing in a building that we are leasing, an office building, I expected that building to not lease up at all. We actually got it full. And it's an office building in Vallejo, which blew my mind because I know leasing office space is tough right now. But in that particular area, the office is leased up well. What I'm just saying is, in general, you're going to have a much better time leasing up apartments, even in the tougher environments like we have, like in Oakland, downtown San Francisco. there's a lot of new buildings hit the market at the same time while this pandemic hit. So you're seeing first month free, you're seeing rental concessions, you've seen rents drop a little bit. But I bet you those guys are still renting up their apartments quicker than the office landlords are leasing up, the retail landlords are leasing up. Maybe the industrial, maybe not. But again, like with industrial, you gotta know that business. You gotta have connections in that business. I think you can make a lot of money there, and the demand is certainly there. But for most investors, it's gonna be a lot easier for you to rent out apartments than it is even industrial space. And that's why I think it's the best investment for you that's out there. And that's really, really something that you gotta consider in terms of knowing what's gonna work for you, right? Everything in the marketplace that glitters ain't gold. And what works for someone may not work for you. And so I think that is the key. And that's why hey, apartments are simple, apartments are easy, financing is attractive, lease up is easier, right? And the last thing that I would like to say is that we are seeing pretty big migration trends, meaning that people moving from certain areas to different areas. For all of y'all in the great state of Texas, you are seeing a bunch of Californians moving out there. And in fact, you're gonna see a bunch of more vegan places start opening up. You're gonna see bike lanes in your downtowns. You're gonna see a bunch of stuff from California start pushing out there to Texas. Because a bunch of people moving out there, right? So if you're an investor that invests in multifamily or is interested in multifamily, it would be wise to figure out, well, where are people moving? Okay, are people moving? Like we know a lot of people moving to Austin, a lot of people moving to Houston, Dallas, these type of cities. Like in the Bay Area, people moving to Antioch, Pittsburgh. Outside of the Central Valley, people moving to Stockton and the surrounding areas. I'm sure in Southern California, there's some spots, maybe people moving out of, maybe LA, maybe they're moving to the Inland Empire. Figuring out where people are moving to, and then going and buying some deals, buying some properties in that area can be a very, very effective model. Now, some people don't like to invest outside their backyard. I get it. But I think there's a lot of opportunity if you can figure out where people are moving to, get a good property management company, and buy some apartments out in that area. I think you're going to do really, really well. And I think a good way to look at where people are moving to is to look at where the jobs are moving to, right? The reason I like Stockton, and a lot of people think I'm from Stockton, there's actually beginning to be employers moving out there. Amazon opened up a distribution center about a couple years ago, and brought over 3,000 jobs to the market. And that's a big deal. 3,000 jobs, that's a big deal. And especially when one employer does it, you'll probably see other employers do it. You're seeing a bunch of California companies saying, I'm tired of this taxes and laws and rules. We're gonna go to Texas. Ain't no state taxes, and we're gonna be able to do business a little bit easier. So there are gonna be jobs falling over there. And that's why, and you all in Texas, you're gonna see probably a boost in home prices, boost in rents. So it may be more difficult to find a property out in those areas, but if you can, will most likely make for an excellent investment. And so that's me being a multifamily guy. I'm biased, I believe in it, but I want to at least state my case as to why you still should consider investing in multifamily. Even if you're exchanging and you're sick and tired of the Bay Area, consider the multifamily properties. If you do single tenant, triple net, you can make money. If you do, you can make money anywhere. I just think multifamily is still the best investment, pound for pound, dollar for dollar. Now, I'm interested to get your feedback on this. Give me some comments on it. If you think I'm an idiot and you want to tell me why retail is the best, industrial is the best, whatever, throw that out there. Let's get some dialogue around this. I think we need to start talking about these types of things look, we're seeing a lot of people exchanging out of the area. And if it's me, I want to make sure I'm making the best possible decision for my portfolio, for my family, for my business. And I'm sure you are doing the same thing as well. So it's been real. As always, I enjoy this time. If this is valuable, throw us a like, subscribe to the station. If you don't like it, tell me why you don't like it, comment, and let's continue, having this discussion about the best business in the world, the commercial real estate industry. All right, y'all. Have a great week.